The stock market reversed a triple-digit rally. It ended up sharply lower after the Federal Reserve shrugged off pressure from the White House and announced another interest rate hike.
Hillary Lane has the details.
Financial markets around the world were listening as the U.S. Federal Reserve issued its verdict on interest rates. The central bank announced the fourth increase this year, hiking the benchmark short-term rate by a quarter point to a range of 2.25% to 2.5%. Fed Chairman Jerome Powell explained the decision.
This is the best year since the financial crisis. You've had growth well above trend. We think this move was appropriate for what is a very healthy economy.
The Fed's rate hikes are meant to keep inflation in check, but higher rates make it more expensive for consumers and businesses to borrow money, and that feeds into concerns about another recession. Jitters over the economy have already taken a big toll on Wall Street. The stock market has dropped about 12% over the past few months, and it could post its first annual loss in a decade. President Trump weighed in on Twitter twice this week, trying to discourage the Fed from raising rates. On Monday, he wrote, "It's incredible the Fed is even considering another rate hike." And on Tuesday, he warned the Fed not to make another mistake. But the Fed's job is to set monetary policy regardless of political pressure.
Political considerations play no role whatsoever in our discussions or decisions about monetary policy.
Just a few months ago, the Fed forecast 3 rate hikes for next year. But with signs of a global economic slowdown, policymakers are now predicting no more than 2. Hillary Lane, CBS News, New York.
The Fed adjusted its outlook to project economic growth will slip to 2.3% next year, down from an earlier estimate of 2.5%.